Is there a New York exit tax? There is not. New York charges nothing for leaving. What New York does is decide whether you actually left, and it makes that decision years later on audit. There are two tests, and failing either one is enough. The first test is domicile. Where is your permanent home? Your New York domicile does not change on its own. You have to demonstrate that you abandoned it. The second test ignores your intent completely. Statutory residency asks two questions. Did you keep a permanent place of abode in New York? And were you present for 184 days or more? Any part of a day counts as a full day. A lunch in Manhattan and a 2-week stay look identical. Fail either test, and New York taxes you on worldwide income. Then there is Section 639. When you change from resident to non-resident, income that accrued before the change gets pulled back. Deferred compensation, vested incentive pay, installment gain from a sale that closed while you were a resident. The question is not when the money arrives. The question is when the right to it was earned. Section 639 subsection D offers an alternative. Security acceptable to the commissioner in place of the accrual. Almost no published guidance mentions it. In the move year you file Form IT-203. Worldwide income for the resident portion. New York source income for the rest. Florida has no individual income tax, so there is no Florida return. And the estate tax is where a half-finished move gets expensive. The New York basic exclusion is $7,350,000 for 2026. Exceed it by more than 5%, and you lose the exclusion entirely. Florida documentation supports your case. It does not decide it. New York decides whether you left New York. This is education, not advice, and outcomes depend on your facts. Tax Expert Today.